Good morning, everyone. Today is Wednesday, it's March the 27th, and this is the Futures in 5. Taking a look at the market on a daily space, let's talk a little bit about what's actually happening. I've started looking at these broader time frames for us to realize that when we're sitting in the middle of intraday noise, what we have to look for. So today, we have something very interesting. One, we're leading up to the GDP, which is coming tomorrow, so we're probably going to see inside motion in general over the next day and until the morning. And, that GDP number is going to either be good or it's going to be bad. But here's what the traders are looking at right now. If it's bad, the traders are going to try to press us down into deep support. And then the folks looking for value are going to try and buy that up. Now, the reason for that is that we are still in a positive trend. And in a positive trend, people are going to look for areas of support to bounce, right? They look at those areas of support to bounce like they did a couple of days ago. They're going to try it again tomorrow if it comes down. And if it doesn't, they'll go into the next level, and that's going to be the 7250-ish area, right? Nothing is solid. It's a range of motion, not an exact number. Okay, so when we look at this, what are we seeing right now today? Well, what we're seeing is basically, even if we lose the level, we hold support. And that support level has drifted lower. It used to be 28.14 and some change. That's what we were talking about. It's now 28.07 and some change. And so it could dip below there, but if it holds, we're going to be in pretty fair shape to grind sideways. So we've got a lot going on. We still have lower highs. We still have higher lows. We have price compression here. Traders are trying to figure out what's going on. And the investors are sitting around saying, well, you know what? We've got yield curve inverting. We know that we've got a global slowing. We know that we need to shift our weights around from wherever we're moving. And that's going to make them more cautious in terms of what they're doing here, because the slowing is not going to give them alpha in one direction or another, and these instruments are used to hedge. And so if that doesn't make any sense to you, don't even worry about it. Just let it go, and we'll pick it up on another day. The big picture is the following. This is sideways. Your deep dips are going to find buyers. Your big spikes are going to find sellers. And the big spikes are going to come at whenever, but they could stop as easily and quickly as this area, where we expected it to run into trouble. I actually expected it to run into trouble just a little bit higher than that. So the fact that it's lower gives it a preemptive move, and a preemptive move just means, hey, I didn't test that well enough. So I'm fairly sure it's going to come back up here into this noise. And so it's going to lurk there. We'll have it trigger multiple times and see what happens in that space. All right, let's take a look at the NQ, flattening out. We had a big bounce yesterday. But take a look at these 2 days, and what do we see? Opposing tails. We see buyers show up here. We see sellers show up here. So what we're looking at is broad line congestion with a fairly wider range. So that range of motion is congested. We can see sellers still sitting right around this area at the 73.90-ish area, but buyers pretty close behind. So we're squeezing this formation. Notice the buying volume not as strong as the selling volume. And that is going to be something that we continue to look at. Doesn't mean about testing certain places, it's about staying in those places. And we've got a little bit of bearish traction. If it loses this edge, it's going to come down into our next areas of support, which are fairly congested, but between this region, 7240, and this region, 7260. YM, very sideways, very convergent, negatively divergent, excuse me. We've got buyers coming in at the bottom, sellers coming in at the top. We have lower highs, we have higher lows. That is another example of price compression. And price compression, what happens, right? We squeeze and then we expand. And then we squeeze and then we expand. It's just part of the natural rhythm. So we're waiting for a break in this motion, but my suspicion is even if we break, we'll fall into a deeper support edge that holds, or a broader and higher edge that fails. And so that is what we are looking at. Midline congestion, still sitting above the zero line. You know, it says, listen, you know we've got decisions to make over here. If we start losing this level at around 586 or so, then we're likely to drift down a little bit more. But since the GDP is tomorrow and we've got all kinds of things holding in the balance, I think we're looking at sideways action that maybe comes down a little bit, just like yesterday, and then pops right back up. Taking a look at oil. Oil's fairly sideways today. It says activity halted at Venezuela oil port upgraders after blackout. So they are saying that we've got this bullish pressure because of this motion. And that may or may not be true. We still have negative divergence, and this 60 is going to be a tough level. I got to tell you, though, if it breaks it, it's probably going to run like the wind. So you notice buying and selling pressure fairly similar. John Kemp says that they've rotated out of a lot of their positions. The hedge funds have rotated out of their positions from the long side, and so we should see fades into frontline support. So 3 days ago, we had a lovely fade into this zone that's holding, but this area is still a killer. API had a build. And so as we take a look at this today, EIA could be totally different. The question is, what are traders going to do? If the EIA gives us another build, traders might just push this all the way down to get themselves the next leg up, because this is still very, very bullish. And so you can look at shorts, but that's not where the main motion is. The main motion says wait until it comes back into frontline support and then take the ride up. Gold, we rolled contract overnight, and now we are sitting up here. It's a fairly big gap up from the prior contract. Let me take a peek to double check on that. No, they've actually rolled the contract in another sort of way, so we can't see that so well. Yeah. So what are we looking at here? Here is old resistance that became support. That's not here. So we've got 1313, and then we have this area around 29. Now, my suspicion is we're going to get bogged down here, right? I think there's going to be a little bit of a recalibration. Overall, our price points suggest that any pullbacks will be buy zones, and really, we've got a little bit of positive divergence here. So the pullback could be fairly shallow, right? So far, this pullback has been 1317. Everything about this chart suggests shallow motion. This one-off negative candlestick with a ton of volume sitting on it, not sure what to make of that one, but I wouldn't buy the tops here. I'd wait for it to come in and test these regions. This is the VWAP, monthly VWAP. We're sitting underneath it, so that relative calculation about who's making money and who's losing money shows that there's a battle right there. Could be a good fade into support. All right, that's it, and I'll see you all tomorrow.